All right, guys. Good evening. This video is just going to be talking about the CFTC data or the CFTC chart or aggregates that have been sending to the Discord or to the server a couple weeks ago. So I'm sure you guys would have been, asking, so what is this? What does this mean? And I'm just going to break it down in this video and show you guys how I use the CFTC data to find an edge or to have an edge in the market in terms of the different major asset classes. So I'm just going to get right into it. So the CFTC chart is something that most is is just part of a confluence, so to speak. I mean, it's just part of something you used to have or something you can use to add to the confluence for your trades. Obviously, when you want to take a trade, you want to make sure you have the best conviction. So what do I mean by that? Obviously, you want to make sure everything aligns fundamentally, technically, or even with sentiment. You want to make sure you are not on the back end or you are not on the back or the wrong side of a trade. So knowing how to use the CFTC data just gives you this edge and makes you aware of a particular positioning for the different major asset classes. So one thing you need to know about the CFTC data is that it's a lagged information. So what do I mean by a lagged information? I mean this CFTC data or CFTC chart is only updated from the previous week's Tuesday. So what does that mean? This particular data now that we have from 13th of November is representing the data that we had from the previous week up until Tuesday of that week. So I don't know if that makes sense. So let's say let's say for this week now, I send a CFTC or a flurry of, let me just make it simple right here. So this is the Discord. Obviously, this is the CFTC data tab. So you can see right here, all data for the positioning date, all data for the positioning up until Tuesday, 24th of September, 2024. So that means this sets of, or this particular CFTC chart correlates to or correlates to different economic events or correlates to the positioning that we've had up until Tuesday of that last week. So that means Wednesday, Thursday, and Friday does not, like, if we had major risk events or if we had major economic events for Wednesday, Thursday, and Friday, that's not going to be affected, or that's not going to be shown on the CFTC data chart till the next week. I hope that makes sense. So that's why it's referred to as a lagged information. And another thing you need to know is you should not use this as your only conviction for wanting to take trades. Yes, you can use it to add to your confluence. You can use it to know whether you are stretched long or stretched short on a particular pair or on a particular currency, but you should not use this as your only confluence to want to go long on trades or go short on trades. So if we go straight to the this is the percentile rank for assets. You have different major asset classes, but for what I use it most is the currency pairs. It's effective for the commodities as well as equities, but personally I just preferably like to use it for the currency because it correlates not a lot more for the currencies or for the different FX major asset classes in terms of the currencies. I'm talking about the USDT, the pound, the yen, the euro, the Swiss, and also the Aussie and the Kiwi. So if we take a look at this is just an example. So this is the CFTC data or the CFTC chart from 13th of November 2023. So you can take a look at right here, percentile ranks of assets in currencies. If this is above 80, it shows you that it's stretched to the upside, which means it's stretched long. And this, if it's below 20, shows you it's stretched short. So that means you would most likely, you don't want to be buying something at the highs. So that's just what this means. If you get a CFTC data updated for the week, you want to make sure you go through this particular part, the percentile rank of assets in currencies. And then you look if that particular currency or asset is stretched long or if it's stretched short, sorry. So for this particular week, which is 13th of November, you can see USD aggregate, which is what you use to determine if the dollar is stressed long or short. You don't use the DXY index, you use the dollar aggregate. What the dollar aggregate means is the dollar in correlation with the different asset classes. I'm talking the Aussie, the yen, the euro, the Swiss, and also the Kiwi as well. So that's how you determine if dollar is stretched long or short. So you can see right here, the dollar is stretched so long, is way above the AC, is way above the 80 percentile rank. And obviously, once you see this, your next or your go-to, or what you should think next is, okay, what am I going to pair this with now to want to trade dollar to the downside? So you're going to look at the inverse, which is the long or the short pairs, which is the yen, the Aussie, the euro, the Swiss franc, the NZD, or the CAD. So you're going to want to trade something long against something short. You want to trade it the inverse way, which means you want to make sure that either is technical confirmations you have or fundamental confirmations. Personally, I like to wait for confirmation, or I like to wait for fundamental confirmation. The reason is because it gives much convictions. And the reason why I say that is because when you start to have bad data for something that's as stretched as this for the USD, it makes the amount of or the investors or the buyers that are currently holding dollar buys to take profits or to cut the late buyers. So what do I mean by that? Obviously, when you start getting some bad data, when you start hitting some technical areas, it's going to be giving room for profit-taking opportunities. So those profit-taking opportunities is going to reduce the amount of dollar longs that we've been having, which means you can literally, or you can have a trade on, or a mean reversion trade. So what do I mean by a mean reversion trade? I mean, like, if you have something stretched to the upside and it's maybe hitting a technical zone, or it's hitting the resistance or some pivot points or fibs, whatever it may be, whatever your technical confirms may be, you want to make sure that you are not getting in way too high. But that doesn't mean that, okay, something is stretched to the upside means you will not start shorting it or you not start selling it. No, that's not what I mean. I don't mean, or maybe something is way or is stretched short, you will not start buying it. No, you want to make sure you have those confirms, which is your technical confirms or your fundamental confirms. So in this case, I'll most likely be looking to trade USD CAD to the downside. Obviously, if we have some strong data for the CAD or some very weak data for the USD. So that's how I use this to find an edge in terms of just a hindsight view. So I'm going to use an example. So right here, obviously, take a look at this. We were having series of good data for the Feds. So you can see how the USD was completely stretched to the upside. Now take a look at this. This was from the 1st of January, beginning of the year 2024. Now you can see how this completely shifted from being stretched long to being stretched short. So now it's the inverse. We're not having the yen, the Swiss, and the South African rand being stretched long, and then we're having the USD aggregate being stretched short. So obviously now you want to make sure, or you want to look for your technical confirms or your fundamental confirms. So you want to trade USD to the upside, and this is where I'm going to also be showing you guys some examples. But if you take a look at the chart right here, so I want to show you guys what this means on the chart. So this is the USD, this is the DXY chart. So take a look at this. We're literally pushing to the upside from August. Like guys, take a look at this. We've been pushing to the upside from July. We're having series of very good data, and then we reached a zone. Literally, it couldn't break. Price couldn't break past this area. So most likely we'll be looking for a confirmation to want to trade this lower, because like I said, you can't just look at the CFTC data chart and then just short something because it's completely stretched to the upside. No, you want to make sure you have a conviction. So this was the NFP. This was when we had the NFP print. It was actually mixed because we had unemployment coming out higher but NFP coming out lower, but we ended up seeing a downside on the dollar. But obviously it didn't hold because it wasn't enough, so we started seeing the reversion. We started seeing price push back up slowly, and then this was where everything changed. This was on the 14th of November. Let me show you guys what happened on the 14th of November. Sorry, one second, guys. So this so this from Refinitiv, obviously. So this is the CPI data that we had on the 14th of November 2023. So you can see it wasn't even that big of a miss. It wasn't that huge of a miss. Literally marginal miss from from spot 3 to spot 2, spot 4.1 to 4.0, and also take a look at the headline year over year, 3.7 to 3.2, and this was the prior. And we could see the deviations that we had. For core, wasn't that much, but you can see how markets reacted to this. Obviously, it has flushed it has completely flushed the huge amount of buyers that we had all the way from July. The investors or the market participants that have been holding the USD longs, obviously this is now time for them to take profits, because we started seeing those bad data from the NFP to the CPI. So you can see how massive of a move this was, and you can see how literally how this moved to the downside. I mean, give or take, this would have been more than 500 pips or more. What am I even saying? So this just shows you how to use the CFTC data to find an edge in the market. And yeah, I hope this makes sense. And like I said, this shouldn't be your only conviction for a trade. This shouldn't be your only confluence when you're looking for a trade. You want to make sure that you have other confluences. You want to make sure everything tallies, whether it be your technical breaks or your fundamental breaks as well. So this is just a video on CFTC data and how to use it. And as always, if you have any questions, just let me know.